Cool. Progress. You can hear me. That's good. So there's been some interesting moves overnight and this morning. Cable doing what we hope and expect, which is to continue to strengthen the pound. The central bank, Mark Carney, governor of the central bank, came out and said a few things and has pushed the pound or made the pound stronger, whilst the euro's got weaker on what their central bank is doing, which is discussing negative interest rates. And then we had the good old Aussie jobs data come out, and the missed by a mile. We lost 7,000 full-time jobs and only had 3,500 part-time jobs. So Aussie's now bearish. We were discussing yesterday why I wasn't looking at some trades. I'll certainly be looking at them now because I didn't see any sort of major selling in the Aussie. Yes, at this swing high, we certainly have it now. So, and it failed to make a higher, or beat this high back in January. So the cyclicity of the market is still intact, making lower highs and lower lows. So I'll be looking for opportunities on that tomorrow. Anyway, so that's just a bit of a rundown of where we're at fundamentally. Fundamentally, you want to be selling Aussie. You probably want to stay away from euro or its crosses, because whilst it's still leading towards bearish, I think it'll more than likely just be volatile and hard to get a trend out of. Whereas buying the pound is a good option. Looking at any dips or pullbacks to get long that, and selling the yen. So something like the pound yen is something that I'd be looking at for an intraday trade if there's an opportunity. We've obviously missed this, well, I have missed this trend, and it's now well established. So we'd be looking at the 4-hour cyclicity to find opportunities, such as there was, when was that? On the 10th, earlier this week. So, short yen, short Aussie, long pound, and potentially long US dollar, but definitely long pound and short yen and short Aussie, I think, is where you will find some great opportunities in the coming days and weeks. First, an email to go through is this one here from a gentleman who's identified a reversal divergence at the end of phase 2. That's not a bad thing. It's not rare, it's rare to find it. It's not impossible to find it, but it's rare to find reversal divergence here. But we're seeing that, and what we're seeing in this is that the sellers are coming back into the market. So looking to get short underneath this bar here. I've noticed that this gentleman has taken the trade, and obviously there was a large move on this with the euro getting sold off and the pound getting stronger. There's a very large move on this. Not in there. Not being here. Yep. So short there, and strong move down. Certainly be looking at moving your stop after that, getting into sort of break even. So the analysis, you've got this trend line, excuse me, you've got the fib in the correct place. Horizontal, this light blue line, I'm not sure what that is, but you've got one there. So your checklist below the moving averages, yes, 8 out of 9. Yeah, I mean that's fabulous. 0.25% risk. This is phase 1, and I know you've just started trading, so your maximum risk is 0.5%. But 0.25% is good. You know, I don't mind you risking less or taking on less risk as you commence your career. I think that's a wise decision. So, you know, just pluck away and get some positive runs on the board for the first couple of months. So that's good. Next one was a question about the pound Aussie. Pound Aussie. I ended the long pound Aussie at 83.37. but I moved the stop to 81.52 due to the big bearish bar yesterday. Do you agree with me? Despite knowing what what has happened to the pound Aussie, I would have suggested no. This bar here, I don't see any point. Your stop would have been 13 pips under this, and had you been 13 pips underneath that low of 30, your stop would have been at 17, and guess what the low was on this bar? 18. So if you'd had your stop at 13 pips or more, then you'd still be in the trade. If you'd moved it to 81.52, which is only 3 pips underneath this bar, obviously you would be taken out and worn a loss. So, yes, this is a reversal bar and it's a reason to move your stop, but I wouldn't have seen it at any point, because you're only, there's only 20 pips that you'd potentially, or difference, because this is low of 30, this is 55, so it's 25 pip difference. I mean, that's when you're risking, the initial risk was most likely over 100, there's little point. Initial risk is 220 pips, so you're saving yourself less than 0.1% and getting your stop a hell of a lot closer and potentially getting taken out, which is what has happened. So this is not my hindsight talking. This is what I would have advised people to do yesterday. Loving Pound, who was complaining about trading yesterday? Was I complaining about trading yesterday? I don't think. Your advice saved me. I put it at 81.15 and you're still in the trade. Fabulous. Something is making sound fade in and out. Mate, you're the only person who has that, so I dare say it's your internet connection, not mine. Everybody, other people are now saying volume is fading in and out. Well, I'm not sure what it is. This is... It's not the headset. Must be the internet. I do apologise. Not much I can do about that, so we'll have to wait for the video if it's annoying you too much. You mentioned keeping it behind the horizontal. Yep, okay. All right. So the answer to that question is yes. Normally you would potentially move your behind a reversal bar, but if you're only saving yourself 0.1% and you actually, this is the strongest area of support, and therefore it's unlikely for it to continue falling through there, especially when you're already close to being oversold. I don't see that as any point in moving your stop up underneath that. Okay. Wednesday. Okay, no trades placed today. Dollar Sing cancelled. Scaled in on the 4 hour on dollar yen. I think selling yen is a good idea. Pound yen, I'm looking for an opportunity. Dollar yen, my daily trade, we had 2 buy bars, this one and this one. So I've moved my stop to break even. And I'm now also looking for opportunities on the 4 hour. I'll be looking for a swing low or similar like this to get into a trade, and just being patient and waiting for that. Same things, Euro Aussie and Pound Aussie both triggered in. I should have moved my stop below my entry bar, but I did not. Now looking at stopping out at 2 times 0.5% risk. All right, Aussie. No trades on the horizon for daily entry today. Yeah, I couldn't find anything today either. Yeah, look, pound Aussie, as I said, this was it is technically a test bar and a reason to move, but it's not actually testing much, and I wouldn't have necessarily moved it there. Still a high, low. This, as I also suggested, this is a reversal bar, and I wouldn't necessarily moved my stop either. Euro Aussie, again, this is a test bar, but it's not necessarily testing anything. This one here, you might have saved yourself 1/4%, and but there was this massive horizontal here that you should have been underneath, and you most likely would have got taken out because that went through that price by some 60 pips. So it's a pretty strong horizontal though, and we're now back above it. So we now have another ring low, and there's another opportunity to look at that, and that includes the Aussie Swiss. I've seen a couple of questions about that. There's a ring high here, and people went short, got taken out. Would you go in again? Yeah, it's setting up. There's still that horizontal support resistance line. I prefer the Euro Aussie than the Aussie Swiss, purely because of this price action here. Doesn't exist on the Euro Aussie, and yeah, be looking potentially going in again. Well, I think my biggest concern is the Euro Aussie, being Euro, that there's not that hell of a much strength in it. As more what's driving this price action is more the Aussie weakness. So you're looking 280 pip stop, at least 580 there. So you're over 2 times your risk just to get back to this high, which is okay to look at, and potentially maybe going higher. Pound Aussie weekly and monthly show bearish divergence. Should it affect a long trade decision? Revenge trading. Revenge trading? No, I don't think it's revenge trading. It's more setting. You're seeing the setup again. It's not really revenge trading. Bearish divergence on the weekly up here. Yeah, which should signal a sell-off. It's had that sell-off. It's pulled back. It's around the same price. RSI is 49 there. It's 39 here. Yes, it hasn't got to an oversold position. Don't really look at the momentum indicators on the longer time frames. This is not bearish divergence yet. But what I am looking for is is there a trend in the weekly? If there's no trend, no clear trend, like there was no clear trend here, inside, outside, crappy, inside, no clear trend, then that's an indication to stay away. But when you're getting clear trends like this, you certainly look for opportunities in the shorter time frames. And that's what we do when, such as the pound yen, there's a clear trend and you're looking for opportunities in the shorter time frame. Okay. 1 hour time frame, yeah. Okay, that's an email I'll reply to. Jersey, that's an email. I'll fix up your email address. Invoice template, okay, I'll reply to that. Q&A. We got caught with the upside down Euro Aussie, Aussie Swiss. Okay, you traded both. I think the CAD Swiss, Euro CAD, also Euro Pound and Pound Swiss are other ones, yes. Could you let us know if there are any more upside downs? Okay. What this email is about is that the Euro CAD and the CAD Swiss is effectively the same trade. You've got CAD on both sides, and the Euro and the Swiss are very, it's very similar currency pair, and it really hasn't gone very far or goes very far. So therefore, as you can see there on the monthly, because that's stagnant, then when you're trading something like the pound Swiss, the Swiss and the pound, and you're trading the euro and the pound, it's pound takes out and you're effectively trading the euro Swiss, which is going nowhere. So that's what's upside down. So CAD Swiss, Euro CAD is one pair, Euro Pound, Pound Swiss is another pair, Euro Aussie, Aussie Swiss is another pair. I noticed that these guys have added this on now, but you've got Kiwi Swiss, and you could also say Euro Kiwi is another pair. Euro yen, the Swiss yen is the same. It's not the same, a similar trade, but it's not upside down because yen's on the same side. Being the secondary pair, what others would there be? I think that's about it. Yep, I think we've covered all of them, unless we start looking into the Scandinavians and the other exotics that I'm still investigating on whether or not we want to trade them. Okay. Prop course. What was this email about? I'll have to reply to you as an email. Yeah, the new pairs of currency pairs, you guys would have all got an email from AxiTrade about what currency pairs they've added on. I'll still yet to see, investigate it and see it's worth trading. You know, the volatility and the liquidity in them will be much reduced, so I think it'll be trickier to trade, and whether or not we want to do that. Okay, looking for extension on the Kiwi. RSI divergence, nothing there yet, and we're not sort of in exhaustion. Bearish price action, there is now. Fib extension, none. And the email's question says, how do I get a fib extension in here? Well, if we look at the Kiwi, you can see the fib I've got there is this previous phase one down to get the extension is up here. Now, if we look at this on the weekly, we know that we've got pretty much of a range across here, or you could even bring it down a bit to, it's around 84, let's call it 84. Yep, and then 81. So that's your range that has been stuck in for some time now, and we're getting close to being to the top side. There's no exhaustion or divergence yet, I agree, but then if you're looking for a fib extension, you draw the previous down there, and we can see that it's pulled up at 1.272 at this stage, and 84.50 is the 1.618. So it's, if 84 is right in the sell zone. So if we get any sort of bearish action in there, in between 1.272 and 1.618, then that's your signal to get short. It may not get there, this thing. I think it'll probably fail and continue to fall, despite an email I received last night applauding the Kiwi economy. Thanks for that. You haven't received an email about extra currency pairs? Well, I got one in my personal inbox and as well as my Knowledge to Action inbox. So I've deleted them. No, I haven't. I'll forward it to you, mate. Just email me, and I'll get it to you. Email it to David at Knowledge to Action, not the Prop Manager one, because I've got it in that inbox and I'll send it to you. Right. Another question on the Aussie Swiss, whether I got stopped out, if there is a possibility that today's bar forms a lower or a seller bar, lower high, or another short setup will occur with good score on the checklist. If this happens, would you enter again? Yeah, I would. I wouldn't be take a loss on the chin and move on if it sets up and fits your rules, and take the trade. As long as it fits your rules, then you should be looking at the trade. yen crosses. Some entries are happening on the yen. What would I do if it's a lower high, lower low? And this bar here, we've got a swing high, and if this is a lower low, you've had a cycle under the 50 EMA. Yes, you've got bearish hidden divergence there, but yeah, you've got this trend line which is trailing along. Look, I'm bearish yen. And I think that this move down here is just that emerging markets crap, and the market's starting to recover from that. A little sell-off here is nothing to be concerned about, but it might give us an opportunity to get into the market at a cheaper price. I certainly wouldn't be going against the long-term trend, which is really quite bullish. I think this is a lower probability trade than looking at going long. And your euro yen, everybody wants to short this. So don't know why. Oh, is that the euro yen? This is your Swiss yen. Oh, they're both Swiss yen. No, they're both Swiss yen. Yeah, I'll probably put the circle along that trend line on the other side of it, up here somewhere at the 1.618. That's probably where you're looking at a target. I notice you don't have a checklist on this, but that's where I think this is heading, because I believe the yen is overbought and is due for now another run higher. And so if it's a lower high, lower low in the daily, I'd just be waiting for long opportunities. Okay, last email, and then I'll come to your questions. Tom, mate, your test worked fine. This is exactly what we're looking for. Obviously, just need your checklist on it, but you might want to change the colors of your moving averages and remove a few. I can see that you got the 10 there. Don't need the 10. We just need the 50 and the 200. And if you change colors so we can identify which one's which, take the colors out of your chart as well. But just the way you've attached it is fine, so I can open it without sort of revealing who it is. What is this? Euro daily. Okay. Is that the Euro daily? Doesn't look like the Euro daily. Must be an old one. Euro doesn't look like that. It looked like it was back here somewhere. Oh, here. Yeah. So yes, that's fine in doing an attachment like that. It's good. It is really old. Okay, cool. All right. So I had a question. Can you show us how to set up fib clusters? Yeah, I will. Okay, all of those ones I need to reply to emails. Right, fib clusters. It's what can we use? Aussie dollar is a clever one. What fib clusters are we looking at? If I can go back in time long enough. What we're looking for in fib clusters is literally you're drawing potentially different time frames, i.e. Off a weekly chart or a monthly chart, or a 4-hour chart, and you're drawing valid Fibonacci's, but then we're getting you're getting the two lines coming in together, right? So you can see that I've drawn a fib from this low here and a fib from that low there to the same high, but we've got this what's called a fib cluster, which is where you get two Fibonacci's come in at the same price, and it's literally that's simple, but it's literally drawing that, and we can see that there's a cluster at, I think it's 80 cents or 79.50, somewhere around there. So that's one example. I'll try and think of another example, but using it a different way is euro. All right, so we look at the monthly on the euro, and we draw this move here. Yep. So we've got that, and we can see that its price is sort of stuck between the 50 and the 618 at the moment. And you then might be sort of looking at drawing an extension. For argument's sake, you draw this. No, this hasn't worked. So where would you get a fib cluster? I know there was a fib cluster around here. If we look at this move to that, there was there. We can see that support area there, which is a difference of 15 pips. That's another fib cluster. Okay. Does that answer your question? I haven't done anything from this end, Nick. I don't know what the why the sound is all of a sudden better. Management on my trades is I had two buyer bars. Yes, it's an inside bar, but it is certainly a buyer bar. Two consecutive buyer bars. My stop went from underneath this bar here to now to break even. So now it's just sitting back and relaxing on that one, and letting it breathe. On the cable, there's two trades going, and I've just moved them to break even. This one here, I entered on the daily time frame, and the stop is now underneath this. This one here, I did have two on the daily at around the same price. Closed one down on the close this morning, and left the other one going. This one here is on the 4 hour. This trade here I entered on the 4 hour, and so two buyer bars, and I've moved my stop there. I could now effectively move it again to, come here, dog, two buyer bars. So it's underneath this one here. What's that? 74. So we'll go to 61. Yep. So there was a question as to trade management on some of the pound crosses. So pound yen, I should add euro pound to this one as well. You've got a large extended bar here. You'd certainly be getting your stop to either above that or at least break even. Worst case scenario, that's where you'd have your stop at break even, because this is such an aggressive extended bar. You want to be able to lock that so you've got no risk on the table. Okay. And pound Aussie, well, if you were in back here, you've got two consecutive buyer bars, you'd be placing your stop underneath this bar, which would be at break even, and you'll be doing that tomorrow morning. You'll possibly do it back. You'll possibly do it now. I'd prefer you to wait till tomorrow morning, but it's highly unlikely that it's going to retrace all the way back here, unless the UK blows up overnight and Australia is the only country left standing. But that ain't going to happen. So that's two consecutive buy bars. Your stops at break even. and you're risk-free, and then you'll be looking at the cyclicity of the lower time frames to add to it, or just monitoring it to trail your stop along it. That's the pound Aussie. Pound CAD 4 hour. I'm looking for hopefully a pullback to around here on the pound CAD 4 hour to get an opportunity to go into this. Wasn't really a believer of it coming off this point here, but now we're sort of broken and it's trending. I'd like to participate, just waiting for a pullback and get a trade on that. Pound Swiss, that wasn't the question. Pound yen, again, you've got a good strong trend. Again, I'm looking for the cyclicity in the lower time frame to participate. If you're in this and you went in here, 2 consecutive buy bars, 1, 2, you're into another 2 consecutive, your stop should be underneath this, at least underneath yesterday's bar, and you'll be locking profit in. And what was the last one? So that's a pound Aussie, pound yen, and pound dollar. Covered them all. That was the pound Aussie. You got stopped out. Where should I rather have the stop from the start on this chart? On the pound Aussie, we'd look at, if you can see price either down the bottom here of the chart, or you can see it up on the wait up. I'll open the data window. You can see it here, right? So the low of this bar, 81.30. Oh, there you go, 81.30. So you should have been 13 pips underneath that bar, or more, 13 or more. And doing 5 pips, I don't think is smart enough. Could have even potentially gone underneath this bar, but I think that might have made the stop quite ridiculous. But we then had this reversal bar, but its low was 55, so that's an extra 25 pips you could have saved yourself. But had you moved your stop 13 pips below that, that's at 42, you would have been stopped out because the low was 18. So whilst this is a reversal bar and a reason to move your stop, it doesn't mean you have to move your stop, but it's a reason to move your stop. I wouldn't have done so because you're only saving yourself maybe 20 bucks, and your stop is well protected under here, but it's not that protected under there. So risk that extra 20 bucks. You're prepared to risk that full 1% on the trade anyway, or 0.5% or whatever it was you're prepared to risk, and you're only going to save yourself a minor amount of that risk. I don't see there any point when your stop is well protected there. Does that make sense to you? You got stopped out 7 pips. That is freaking frustrating. You seem to be the bar of information easily. I can rarely get AxiTrader to show that unless I make the bars into candles. Well, I have it nice, evenly spaced. The bar information is there. It's all there. If you hold your mouse on the close, it gives you on the little closing side of it, gives you all the information. The open, high, low, close, and the volume for the day. Okay. As I said, I think looking for shorting opportunities in the Aussie is where we'll make some money this week. Most of the news is out. There's nothing until sort of, for the Aussie anyway, until early March when the RBA meet again. There's nothing really going to upset that apple cart unless China starts to turn, and everybody keeps talking China down, but what, they're still plugging along, still doing extraordinary growth of 7+. GDP, gross domestic product, is well over 7, and no one else is near that. So I don't see China, despite everybody bagging it, failing. And so I think the Aussie will continue, won't have too many upsets, and will continue to struggle because of the, as Liberals clean up the friggin' mess that Labor left behind. Pound, still bullish that, and you continue to look for buying any dips. And yen as well, I'm still bearish that. US and the US dollar and the euro are a little harder to read, and so they're the pairs that I'll be looking at. Okay. Is today's bar too long already for an entry on the Aussie dollar? I wouldn't be entering it today, but certainly be looking at it tomorrow. And is it too long? Well, it does look like an extended bar, but if we, let's say, we'll go over at this point here and look at a stop at 90.90. 90.90, and your entries, you're talking about 160 pip stop, 175 pip stop, but then, to the previous low is 250, so that's 1.5 effectively, but if the trend should make a new low, so you're looking at least 1.5, potentially more. 85 cents was bandied about when we're coming down here, and I dare say that's probably where we'll get in the next run, is down to 85 cents. But another way to look at it is to go, well, we generally stop at the 1.618, don't we? We stopped at the 1.618 on that move down. So if this is going to do that, then you'll be looking at the 1.1618 at being, crikey, 84 cents. So, if that's the case, then you're risking 170, let's call it 100, even if you go over here, let's call it 200 pips, but there's, 500 pips in the trade. So that's 2.1% times your risk. So that's it. Okay, you survived the Aussie Swiss, you cheeky dog, and the Euro Aussie and the Pound Aussie, because I had very wide stops and I was lucky. Thinking about stop losses, have you ever thought about altering the stop loss by currency pair depending on its ATR? For example, the yen crosses are more volatile. Absolutely. If the ATR, for those who don't know, is average true range. So it tells average true range is let's leave it at 14. This, you can't really see that, but what it tells us is what the average on at this point in time, we're averaging 95 pips per bar. In a day's range is 95. Back here, when the market was going sideways, we were averaging 60 pips in a day. So what the suggestion is that you could amend your stop. You might say, well, if it's only doing 60 pips in a day, then I'm going to make my stop at least 25% of that, because it's unlikely that it's going to, or 50% of that, it's unlikely that it's going to move 30 pips below the low of the previous bar, or something like that. So yeah, you could certainly add ATR into your calculation, and I don't mind if you do. Obviously, you need to be aware that when you do that, you're going to potentially increase your risk in pips, and if you risk, therefore your lot size may be quite a bit smaller. But if you're accepting of that, then happy days and go for it. Can you go into the Aussie Swiss tomorrow morning? Not today. You've got to wait for this bar to finish. We don't know where it's going to finish yet. Same with the Aussie, but yeah, you can have another look at it. Same with the Euro Aussie. Bounced off that strong horizontal, and it's a ring low, and again you could have a look at that one as well. And now that I'm seeing the sellers, I'm going to join you this time. The sellers in the Aussie, that is. Okay, guys. Any other questions? So, pound there, pound CAD. Waiting for that. Doesn't look like it's going to come back for us. Pound yen, waiting for some cyclicity in that. It's also nowhere near it. Go you, good thing. Yeah. The other one I was looking at is dollar yen, waiting for some buying to come in and jump on that. Okay. Should I be starting on real money if I am still in a loss in demo? Although after yesterday you're close to break even. If you've got your live account, you should be trading on that with minimal risk. You know, when I say minimal risk, I'm saying 0.1 or 0.2% as your risk, and until you get some confidence in your ability to identify trades and to manage them, and then you can start upping that risk. So if you're on demo now, then you should be looking at moving into live, yes. Okie dokie. Any other questions? I'm in the CAD yen, it's going down now. Where should I have my stop? Where, you tell me, where would you think your stop should be in the CAD yen? First thing is, are you trading this as a phase 2 or are you trading this as a range? And I dare say your entry is there. What would have been about there, or it should have been about there. Range trade. Well, to be honest with you, I don't think it's moved far enough to even get your stop to break even. You know, you want it to be up here before that. No doubt your top end of the range is across here. Yep. And the bottom end of your range should have been about across there. Yep. So on that basis, you know, you're not even halfway to it. You know, your range is 500, let's call it 600 pips, so 300 pips is around the 50 EMA. That's when you should be sort of in this area here. You'd be looking to get price, your stop to break even. With this bar here, it's only one bar. I wouldn't be freaking out about it. You know, we're not overbought yet, so that the sellers aren't getting earnest. Worst case scenario, you probably have it underneath your stop, underneath this bar here, the bar that you got in on, just to save yourself about half your risk, half your initial risk. And then when price gets up to here, then move your stop to break even. Once your stop is at break even, walk away from the trade, have your target set, and it will fart ass about on its way up there. You know, that's what range trades do. They fart ass about. This was in a range before across here, and you can see that it didn't always come back. You would have got taken out if you were using reversal bars. But it got to the bottom end of the range and then it rallied again, and it's not always one directional. So get your stop to break even and then just walk away from it and wait till it hits your target. 91.87 is your stop. Okay. Yeah, I'd be just under sort of 91.70 at this stage. Did you take the pound CAD long or pound Swiss recently? No, I didn't. Money in the pound itself. Pound Swiss. Someone was looking at this yesterday. I wasn't absolutely in love with it. Pound CAD, no, I haven't been in it for some time, and since back here I think I was last in it, which is unfortunate. I missed out all of this, but I'm looking to get in it. The cable, I've gone through the cable on how to manage it several times, but you've got a strong buyer bar. Your stop should, you've got two buyer bars. After one seller bar, two consecutive buyer bars, your stop should be underneath that, which, as you can see, my stop loss is. Now that it's at break even, you're at better than break even, being underneath this bar. You've got, what's that, about 40 pips or so. You let the trade run and see what happens. You know the rules, you've written them down, you should know the rules by now. 2 consecutive buy bars, 1, 2, stops underneath it, as that stop is. Reason to scale, what do you mean scale? Scale out, scale in, what? Scale out, not yet. Can if you want, but okay. Dollar Sing, looking like it's trying to do a ring low here. Last time it did a ring low and ran. If this is a high low, there's possibly an opportunity there. The hardest thing on this one is finding a support line that's going to work for us. Alright, if we put that there. I mean, it's better than it was when it was up here. We were looking at it, but it's still quite weak. There's only really one turnaround on it, and that's that there, that retest. So it is rather weak, but it might suffice. And certainly now that it's tested the 50, that's a bit stronger too. So yeah, that's looking good. Yes, mate. Take some profit. If you certainly if you're negative, you should be looking at taking profit on the pound. That is. Okay. Any other questions? Thanks, Duncan. I'm glad the volume's improved. Sent a late email. Let me log in. Euro pound. Is there a case of bending the rules? This was a engulfing bar, but it was bearish bar. And whilst you don't want to, sort of engulfing bars are indecision in a sense that at one point it's making a higher high and then it turns around and makes a lower low. You're expecting, you've done all your analysis, you've got your trend line, you've got your horizontal resistance, you've got your Fibonacci resistance, you've got a bearish bar. Hell, you've even got hidden divergence. Even though, no, it's not hidden divergence, that's convergence, sorry. You're expecting to see the sellers here, and that's what you had. So whilst I wouldn't necessarily go in with a full 1%, you could make the argument for the trade on that there's a bearish bar there. I believe in the course I've said that it doesn't have to be a ring high, a ring low, swing high, swing low. What you need to be seeing though is that sentiment when you expect it. Now it's gone. Certainly have the sentiment there. Fib extension used in a 4-hour. The only time you'd be doing a fib extension is if the market was doing a phase, you're trading a phase 2 on the 4 hour, and I'd rather you weren't doing that. I'll give it a toss what the manual says. Not really interested in what the manual says. That's what I say. For argument's sake, this is doing a phase, trying to attempt a phase 1 into a phase 2. Yep. Sorry, this daily, you've got to do all your research on the daily. All right, and I've just done the research. There's the 50 fib there, amongst other things. Okay, so we like this on the daily setup. We go to the 4 hour, and you look for the reason. Can you tell me why you would be looking for extensions on this? Why would we be looking for extensions at this point rather than retracement? I presume you guys can't type fast enough, but the reason why we're looking for extension at this point in time is because it's at the end of phase 1, and you're trying to trade a phase 2 on the 4 hour, which I prefer that you didn't. You know, we need to get some runs on the board before we start trying this, but that's the only time you'll be looking for you know, your extensions on the 4 hour trading. In a normal market such as this one, what we're looking for is support. So we're looking for support. We get the 786. We look for support. We get the 382, which is a bit weak. It worked. Okay, you're using the cyclicity on the 4 hour to participate in the trend. Yes, mate, the manual is wrong. We discussed this in the course. I know you were there because I remember seeing you at the course. I'll put a match to that fucking manual one day. On your checklist, bullish and bearish chart patterns. That's something that I would rather not have. Look, what you guys have got to understand is that manual was written by someone who has very little market experience, and he was just trying to. It's like filler. You know, it's like a bloody Sellies. That's what that manual is. It's effectively Sellies. They're trying to fill you up with stuff that is not necessarily of any friggin' use. And that's why I've been, you know, waiting to find out what the hell is going on with the future of this educational course, so I can write a decent one. Bullish bearish chart patterns is talking about, you know, double bottoms, you know, head and shoulder patterns, flags, pennants, all that sort of stuff. If you see that sort of thing and it's breaking out, or to potentially adds weight to the trade, then yeah, you know, you can certainly look at that. You know, you know, I think there's a. Let's have a look at it. I'm not having a look at the bloody. Yeah, does that make sense? It's, yes, you're right. It's head and shoulders, etc. Is that correct? Yeah. Next Wednesday, the cruise. Yeah, I'll be down there on the 19th. Deep joy. Yes, I will write one. And yes, too exciting writing a manual. But I will do that once I know what they're actually wanting to do with the future of it. And I'm going to try and include the shorter time frames. So when we get shitty markets like we did in January, we can actually still make some money on the shorter time frames. Rightio. Oh, you're all coming on the boat. Cool. Bring your sailing shoes. It's a big glass boat. Otherwise, guys, I shall see you on Monday. It's Supergirl's birthday tomorrow, so I won't be with you tomorrow. And I think the next one's on Monday. You guys tell me, is the next one on Monday? Yes, next one's on Monday. Okay. Trade safely. Tread lightly, but yield a big stick. Who said that? It was one of one of the American presidents. Anyway, you guys have a lovely weekend, and be good to you, the better half. She expects it tomorrow, not because it's her birthday, because it's Valentine's. And I'll see you on Monday. Cheers.